Welcome to the Explainer. So today we are diving deep into the crypto market because, let's be honest, it's sending some seriously confusing signals right now. I mean, on one side, you've got traders who are saying warning signs popping up everywhere. And on the other, you've got investors saying, nope, the big one is just getting started.
So, what's the deal? Are we on the verge of a massive, life-changing bull run? Or is this whole thing just a classic bull trap, the kind designed to suck everyone in right before the floor drops out? The crazy thing is, the market's giving us signals for both, and that's exactly what we're going to unpack.
What we're going to do is look at two completely different analyses. I'm talking about two expert sources looking at the exact same market data, but they're forecasting two totally opposite futures. We're going to break down their playbooks, see the market through their eyes, and try to figure out how on earth they can both be looking at the same charts and come to such wildly different conclusions. All right, so to really get a handle on this, let's frame it as a kind of battle of archetypes. First up, you've got the technician. This is your pure chart reader, someone who just lives and breathes price action, patterns, all those technical indicators. And then you have the storyteller. This person looks right past all the daily wiggles on the chart to see the much bigger picture, the macro story, the flow of big money, and the fundamental narrative that's really driving this whole market. And you know what? There is probably no better place to see this clash of perspectives in action than with the crypto asset Cardano, or ADA, as most of you know it. Both of our analysts have a really strong opinion here, and, well, their views could not be more different. So the technician, our chart expert, looks at Cardano's recent price action and sees a classic textbook corrective pattern playing out. They see that powerful move up we just had as just the first part, what's called Wave A. That little bounce we're seeing now, that's Wave B, and to them, it's a classic bull trap. And what comes next? Well, that's Wave C, a final leg down, with the target somewhere around 85 cents. So for the technician, this is a clear, data-driven, short-term bearish signal, no question. But the storyteller, they're not even looking at these small waves. They're looking at the entire ocean. Their whole perspective is framed by this philosophy. First they call you crazy, next they call you lucky, then they ask for your advice. Basically, breakthrough investments almost always look nuts at first. Then when they start to work, people just chalk it up to luck. And only when it's a massive success does everyone come around asking how you did it. And applying that exact philosophy, the storyteller looks at Cardano right now and sees what they call the last chance under $1 phase. See, for them, that $1 mark isn't just a number. It's a massive psychological barrier. They actually compare it to when Ethereum was fighting to get over $4,000. Remember that? Once it finally broke through and stayed there, it just shot to its all-time high. And here's where it gets really interesting. To back up this story, they actually borrow a tool right out of the technician's playbook. The storyteller zooms out on the chart, way out, and sees this massive multi-year cup and handle pattern forming. Now, if you know your charts, you know this is one of the most powerful bullish patterns out there. And if Cardano can break out above that $1 resistance, the measured target of this pattern points to a price of over $4.26. Just wow. Okay, so that's the grand super bullish narrative. But let's pump the brakes for a second and switch back to the technician's playbook, because all those short-term warning signs they saw in Cardano, well, they're starting to see them pop up across the entire market. Yeah, looking at the technician's watch list right now, it's basically a sea of red flags. For Bitcoin, that last weekly candle closed as what's called a hanging man. That's a pattern that often means the upward momentum is running out of steam. For Ethereum, they're watching for a potential head and shoulders top, one of the most famous patterns that can signal a big trend reversal, with a key test coming up around that $3,500 neckline. And even for Dogecoin, a very similar pattern is forming right at a critical Fibonacci resistance level. To the technician, it's simple. The charts are screaming, be careful. The storyteller, on the other hand, just dismisses all these chart patterns as, well, short-term noise. They're not looking at individual candles. They are looking at the massive tidal wave of institutional money and huge global events that they believe are going to completely overwhelm any of these small bearish patterns. Okay, now check this out. What's so powerful about this slide is this single number, $40 billion. That was the combined weekly trading volume for crypto ETFs just last week. That's an all-time record. And let's be clear, this is not a bunch of retail traders speculating. This is a massive flashing sign of huge institutional interest flooding into the space. And if you break that number down, it gets even crazier. A stunning $17 billion of that came from Ethereum ETFs alone. Now, the storyteller argues this was all by design. They say institutions deliberately waited a full year after the ETF got approved to start their big marketing push.
They let the price drift down, shook out all the impatient retail investors, and then they ignited this massive wave of buying. So here's the crucial point. None of this is happening in a vacuum. The storyteller's whole thesis is built on this powerful mix of macro factors all coming together. They see a global economic environment that's about to get extremely friendly for assets like crypto, right? We've got interest rate cuts coming. The end of quantitative tightening, that's when central banks stop shrinking the money supply, is on the horizon. And at the exact same time, you have this relentless buying from big players like MicroStrategy and other whales, all happening alongside major geopolitical and domestic events that are literally shifting the global landscape.
All right, so we've seen how they look at individual assets and the big macro picture. But how do these two totally different perspectives interpret the king of crypto itself, Bitcoin, right at this very moment? And honestly, it's a complete split decision. The technician uses this metaphor of a giant ship, slowly turning. They see the momentum shifting and are warning that the ship is turning south, meaning there's a real risk of a sharp drop if that support level breaks. Meanwhile, the storyteller looks at the exact same price action, that sidewise chop around $67,000, and they see something completely different. They see it as an incredibly healthy sign of strength. It's like a launchpad being built on a solid foundation of nonstop institutional buying, all getting ready for the next explosive move up. So after hearing all that, who's right? The meticulous chart reader or the big picture narrator? Well, the answer, as you might have guessed, isn't about picking a side. It's really about understanding what each of these perspectives brings to the table.
You see, a truly sophisticated investor learns how to build a toolkit that uses both of these lenses. The technician gives you the tools for precision, things like risk management and figuring out the timing for your entries and exits. They help you answer the question of when to act. But the storyteller, they provide the vision and the long-term conviction. They help you understand the market psychology behind it all and answer that much more fundamental question. Why are you even investing in this asset in the first place?
So the real takeaway here isn't about us trying to perfectly predict what the market's going to do next. It's about understanding these two incredibly powerful and valid perspectives. Because at the end of the day, the most important question you can ask yourself isn't what's going to happen, but rather which lens am I choosing to see what's happening through?